just be very efficient for them also to focus on increasing their revenue in other ways so that they have capital to invest. So it doesn't necessarily have to just be like a one or the other type thing. You can kind of blend the two. But yeah, that was all I had to add to that real quick.
Word.
I understand your perspective a lot though. It makes a lot of sense, and I think that that's how it should probably be for most people. All right, so I can share my screen now. I can rap.
Yes, sir.
All right, hopefully I don't share anything weird, bro.
Stop. Stop. Can you imagine?
All
Ah,
right,
crazy.
real quick though. So if y'all are looking for some ETFs specifically from Vanguard because you don't want to like do the research on individual stocks, I'll put this link in the description of where you can find this. But yeah, so they'll go through, and if you don't understand what some of these things mean, I'll explain it real quick. But you can kind of also do your Googles if you would like.
You should. You should. You
But
should.
yeah, so this is gonna be like right here is starting off with large cap stocks. So typically this means like these are the bigger companies in the world. You know what I mean? Well, this is specifically United States, so U.S., not the world. But yeah, so you can kind of scroll through the list and see these different things. Like if you're looking for a lot of growth, there's a growth ETF, dividend appreciation for you dividend people, weirdos, high dividend yield.
He said
Nah,
weirdos.
y'all are kind of cool sometimes. Um, S&P
Nah, nah.
500, there's VOO, that's Bay right there. You got your mid caps, you got your small caps. If y'all are interested in that too, and then there's also sector and specialty ETFs, which I really like these as well. But yeah, so if you're interested in consumer discretionary, consumer staples, energy, financials. You guys can go through the list. This is what we were talking about before: information technology, VGT, healthcare, and that way you don't really have to go through the time it takes to do fundamental analysis on these specific stocks. Like you might just find a sector that you're really bullish on, like you think is going to grow a lot in the future, and invest in an ETF. And if you're looking for individual stocks, it could also be worth it to you to look at these ETFs, like find your favorite ETFs and see what are their top holdings. And that could be a way for you to find stocks to invest in. But to start off fundamental analysis, me personally, I like to use Analyst Reports because it kind of consolidates a lot of information for me and I can get a lot of information in one place. So I'm going to be looking at two Analyst Reports today, but this one is from Simply Wall Street. Um, I believe it's like $10 a month if you want to subscribe to it. Um, but yeah, so it starts off going like through the company overview. So you can click about the company and it will tell you a lot of information about it. So you have like a quick summary of what this company actually does, how does it make money, etc. Um,
Apple, yes, sir.
yeah, we have Apple on the screen right now for y'all that don't see, but it will go through a summary evaluation as well. So for y'all that don't understand how to value a company, it will be helpful for you to look at this because it's looking at a lot of different ratios like PE ratios, price to earnings growth ratios as well, price to book. If you don't know what these are, it will actually already tell you on here as well, and you can do your Googles.
Yeah,
Investopedia is your friend too, by the
I was
way.
gonna say Investopedia is one of the best resources. It makes it so
Yeah,
easy to understand.
but I like this website specifically, Simply Wall Street, because it will kind of like tell you just off the rip how they feel about it or what the ratio is saying. Like obviously, if it has red letters and an X next to it, it's saying it's not really rocking with it all the way, and you can read why. Okay, yeah. So we'll also go through like their future earnings growth expectations and all that. Um, Past performance, financial health. Hey, wealth is health. Remember that,
Let's get
guys.
it. Financial health.
But it will tell you, for example, like like how much they have in long term assets, short term assets, their financial position, debt to equity, all these things. It actually has their balance sheet on here as well. It would be important for you guys to, or this is something that I take into account. I always want a company to have more cash than it has debt, in my personal opinion. Um, it doesn't necessarily have to, but it looks a lot better to me if I know that they can cover all their debt at any point in time. And the reason that it's also interesting to me is because if they have a lot of cash, that also means that they have money in order to acquire other businesses or acquire new technologies and do like more research and development in order to grow their business, like to invest back in their own business. Um, but yeah, and then the last portion of this that is important. I don't care about this dividend stuff. If y'all haven't realized yet, I'm not really big on dividends. Not
Oh,
saying it's trash. I personally just don't really care for them like
nice
that
trash.
at the stage that I'm personally at. Later down the line, when I'm like old and I
And
have nothing
you
better
want
to
like
do.
$10 like every quarter.
Yo, chill out, chill out, chill out. When you have a bag, I feel like dividends
Yeah,
is definitely a
that is a
wave.
move.
And I have a small bag, but I feel like I can do better if I invest for growth instead of dividends specifically. But yeah, another really important thing for y'all to look at when you're doing fundamental analysis is the management team. And here it will kind of break it down a little bit. So obviously Tim Cook is the manager. I mean, sorry, the CEO
Manager.
of Apple.
Yeah,
Yeah, he's a manager. He's a team lead.
yeah,
And it
facts.
will tell you how long he's been there, how
Associate.
much, what his compensation is, and it will go through. Oh, I was gonna say a brief history. This is actually a solid little history right here. But yeah, you wanna look at the management team as a whole to see like, do they know what they're doing? Can I trust them to make like the correct moves with my money? And what is their track history? Because it will also tell you like the different companies that they may have worked with or worked at, and what their positions were there. But yeah, this is incredibly important to look at, and it has a list of like the whole leadership team here as well. So you can do research on all of these people if you really want to. I probably wouldn't do all of them,
Yeah, that's crazy.
but you definitely want to know about the CEO and a couple of other key people as well. Um, and another very 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 important thing for me personally, the ownership breakdown. So for me, I will not invest in a company if institutions, what it says right here, if they're not the majority shareholder. Because for me personally, like there's an argument against it, and I'll address that as well. But I like to play where the wolves play, is how they say it. I like to follow the smart money. So if they're like the majority ownership, and the institutions would be like, it will say right here, top shareholders. Like if I don't see like Vanguard, BlackRock, if I don't see these type of companies, T. Rowe Price and all that, if they're not in here, State Street, yeah, I'm cool, bro. I'm good. So a lot of these more so like pump and dump type of situations that happen in the stock market, you can see institutions do not hold the majority of it. It's what they would call, no disrespect,
A
guys,
scam.
dumb money.
Oh.
General public, like if this is the majority ownership, general public, or even like private companies sometimes, like if it's just a VC firm and they're just pumping their own stock, yeah, I'm cool, bro. I'm not trying to be there. That's not for me. I might trade it. I haven't done that ever, but over time I might trade that with y'all. But I'm about to pump and dump too. Not gonna be a bag holder, bro. Y'all got that. Um, Another analyst report that's also very well and it also gives you like their estimated price target is Zax. Me personally, like Zax is a subscription based service. I think it's like $15 a month, maybe a little bit more. I don't pay for that, but if you have an account with Fidelity and you can just make an account whenever you want, you can actually get some of their research reports for free. So you would just scroll down, you'd hit research reports. Oh nah, it's making me log back in. That's crazy.
That really is crazy. What's the
All right, so let
password,
me.
boy?
Nah, y'all can't see it, right? That's
No,
awkward.
I'll definitely block that out.
All right, good looks. Yeah, I only
Definitely
have
block
my
that out.
employee stock purchase plan here, anyways. Oh, you guys can't even see it, anyways. Word. All right, so you would hit research reports. I look specifically for Zax. Y'all might have a couple others that you're interested in. I like Zax though. So this is another one that's good. They're typically pretty conservative on their price targets, which is a good thing for people that are scared about losing money. But yeah, so their 6 to 12 month price target for Apple is 171. And what is this? Was released November 1st, so yesterday. How do I get back to that actually? So another thing that you guys can do when you're seeing price targets is say for example you want like a 15 to 20% return on a stock, right? So you would discount the 1 year price target by 15 to 20%. So I don't know if you want to do the math real quick, Joel. But what is
Yeah, sorry. There was really a whole call. I thought this entire podcast ended for a second. We're good.
yo, this
Okay.
man.
I'm glad you didn't hear any of that.
But let's say
All
a
right, what is
20% discount, for example. So what is 171 times
it?
80% or point 0.8?
Oh. All right, I did 170 on accident, but it's 136, so you
Same
can
thing.
assume it's like yeah.
Yeah, so if you want to, if, for example, you have faith in this price target, you would probably want to get in around 136 if you're looking for a 20% return in this time period. You got to do your own research, though, and you got to have conviction behind your investments so you can hold through like the dips and all that. But yeah, so this will also give you their summary um, of the company. They give you actually a lot of information, but yeah, so they'll kind of tell you like a few things that's going on with the company in this overview as well, and reasons why they believe that you should buy, as well as what are the risks or reasons that you may want to consider selling. So I personally like these types of reports a lot, and this is why I typically only invest in the bigger companies because people are willing to do these research reports on bigger companies anyways, which is kind of annoying. I hate like no disrespect, but a lot of these people they think that investing is about finding like this new undiscovered company or whatever that no one has ever heard of, and that's why they end up getting burned a lot. I'm like, if you look at just, for example, I know everyone doesn't love the S&P 500. I personally like it, um, but obviously those companies are all very large companies. Like they're the largest companies in the United States, and they're still running. Even if you don't like the return of the S&P by itself, look at the individual companies within just the top 10. You know what I mean? Like they are producing extremely good returns. Like they're still there for a reason. So you don't need to find these random companies that just like IPO'd yesterday or whatever in order to make money.
That's crazy because that
Like,
was Airbnb when it happened, but
well, Airbnb, like
no,
that's been
I
around for a
know, I
while.
know.
We
It's
all
so
know about
different.
it. I'm
I know.
talking about these like weirdo companies.
Yeah.
Um, Speaking of price targets, real quick, we can actually go back to Yahoo Finance. So they actually have their 1 year target estimates as well. So even like when you first, actually, let me go here so y'all can see the full process, the homepage. So you would obviously type the symbol up here. So for Apple, it's AAPL. Scroll down, and it will show their 1 year target estimate is 169.06. So that was kind of in line with the 171 that we just saw, and that's something you want to look for. You want to look for as a trader, they call it like confluence. So you're looking for like multiple kind of signals that are telling you the same thing. Um, and then if you scroll, you would have to hit analysis at the top. But if you scroll down, you can also look at their recommendation rating. So obviously, one is a strong buy, two is a regular buy. They have it at a 1.9. So I mean, take that as it may. But here are some things that you can look at as well in terms of growth estimates. So they're saying next year they're only expecting Apple to grow 6.8%, which isn't really the greatest. But the next 5 years on an annual basis, they expect Apple to grow 15%. Well, 15.43%, which for me is super solid.
I got a question while you're doing all this. No,
Yep.
when you're like analyzing a stock, like typically, how long does it take for you to get like a full understanding of if the stock is good or not? Like an
Um,
actual like number, like a 10 minutes, 20 minutes. Because I'm thinking about the people who are just like, this looks like way too much information.
I know, but
I'll
that's why I
never
feel
learn
like it was
this.
good we went over the ETF thing first. But I would
Yeah, no,
say for
yeah.
like just a general thing, I would say maybe like 15 to 20 minutes for me to read all that stuff.
Mm.
It doesn't take too long, but there are like some other things where I'm going a little bit more in depth, and I'll talk about those in a second. But just one more thing that you guys can look at in terms of confluence as well, like I was talking about. You can use bar chart. So you would just type the symbol up here in the search bar. So you can scroll down to the analyst rating. They also have it as a strong buy over here. So that's something to keep in mind as well. And as just one more thing that you guys can use. Um, And when I'm talking about these different brokerage accounts like Fidelity and E Trade, you can just open the account. You don't have to put like a massive amount of money into it. And even if they require you to put in a little bit of money, you can put in like $50 and then just call it a day. Like put in $50 and then just transfer it back to your account once it clears. That's all you got to do, bro. It's not that serious, and then you have access to these links. But yeah, so when you're on E Trade and you type the symbol up here, something else that you could look at in terms of a 1 year price target is the section where it has analyst research. I actually like E Trade a lot for this. So they have the average price target right here, 170. So they're saying it's a 13.32% upside from where it is right now. And you can actually scroll down and see these different analysts, like their specific price targets, what their analyst success rate for Apple is, as well as their average return.
Just got a
So you can
two and a
take.
half star. I'm sorry. I'm just looking like, bro, like analysts
Dang,
have
bro.
that price target too.
Average analyst return 4.6%. Get out of here, boy. I don't care about what you have to
Yo,
say
what is
about it.
that?
So that's what I'm saying.
Alright.
There's different things that you could look at. The analyst success rate is very, very important as well. So for him, it's
49%.
49%.
Bro, get out of here, son.
So yeah, I don't really care about what he's talking about. But it's just something else that you can keep in mind. So I gave you guys a couple different things in terms of finding out like a price target. And this is important too because I'm going to be talking about like longer term options trading. So that's why these specific price targets are important. When you're truly doing fundamental analysis, I don't really know if having a 1 year price target is the most important thing in the world because you're trying to hold like forever. But for me, it is actually very important since I'm trading it. And then last thing when it comes to E Trade, they also, I think Morgan Stanley may have acquired them recently. So you can actually get an analyst report from Morgan Stanley as well. So their analysis and their price target. So they have it as 164. So a little bit lower than what we previously seen. But last thing, or there's two more things actually that are kind of important to look at. You would want to look at the company's investor relations page to get basically information directly from the source. So they have investor updates over here. You can go through their quarterly results, the news for like anything that they're releasing or they're working on. Something I like to look at a lot, or something that you probably should look at, is a 10K. So this is like an annual report. So it's going to tell you like everything that they worked on throughout that time period, um, and what they plan on doing next. There's also the 10Q, so quarterly reports. I look at those a lot, as well as more importantly, in my opinion, um, the conference calls. I love the conference calls each quarter because that's when they're like, if you don't want to sit there and read a whole report, you can just listen to the conference call. So that's going to be them discussing like the financial results for the quarter. And something that's also very important in them is you get to hear questions from other investors, bigger investors, like the institutions, like people from, excuse me, like JP Morgan, Goldman Sachs, and things like that, the smart money, like we were talking about, and them kind of like grilling the company to make sure that, like, if they're going to continue to invest, that these people have like a true plan as to how they're going to grow their money. So that's something that's really important when you're looking at like like fundamental analysis for a company. You want to have a clear like plan of like or a clear understanding of what this company is actually going to do in order to grow your wealth. Like what is their game plan? What is their strategy? Um, but yeah, a lot of the reports that I went over discussed that, like specifically the one from Zach's, definitely goes into detail about that. And then another thing that I'll do, like once I'm already invested in a company, is like in the morning as part of my morning process, is I'll read like I'll try to read like one article a day about the company, Monday through Friday. So when I wake up in the morning, I go through my process or whatever, and I'm like, let me just read at least one article so I can keep up to date with these companies that I own. Because